When you look at a traditional seismograph, there's actually a certain comfort to the design.
Oh, for sure. It's very orderly.
Right. You have the single needle, and it's tracing one continuous line on a rolling drum of paper. It tells you exactly where the earthquake is, when it started, and the exact magnitude.
Yeah, it gives you a highly localized event. You can literally just point your finger at the paper and say, the problem is right there.
Exactly. But when you look at the global landscape today, I mean, for you listening to this, it feels like trying to read a seismograph that has like a dozen needles all jumping at the exact same
And
time.
that's just a mess.
Yeah, they're crossing over each other. The ink is just spilling everywhere, and it's this chaotic, terrifying ink blot. You really can't tell if you're looking at one massive global earthquake or, 100 smaller tremors that are just triggering each other.
Well, I think we are definitely past the point of isolated tremors. We're watching economic, geopolitical, and technological fault lines all snapping simultaneously right now. The pressure has been building up across these different sectors for years, and now, well, the friction is just releasing all at once.
And that is the exact ink blot we're going to try to decipher for you today. We're pulling from a massive stack of information, specifically diving into the July 29, 2026, 4 p.m. news brief.
Published by the Daily Tech Reader, right?
Right. And our mission for this deep dive is to extract the actual signal from the noise of what is an intensely chaotic news day. We're going to connect the dots between an expanding conflict in the Middle East, an American economy that is balancing on a knife's edge, and an AI industry that is suddenly and frankly very aggressively being forced to show its receipts to the market.
It's a lot to cover.
Yeah.
And just to be clear up front, as we go through these events, especially the strikes and the tariffs, we're strictly analyzing the mechanics of what's reported in the brief.
Absolutely.
We aren't taking sides or endorsing any political stance here, just breaking down the data and the events as they are laid out.
Yeah, totally. Strict neutrality. We just want to figure out what the data is telling us. Okay, let's unpack this. We have to start with the physical spark that is currently setting off all these other alarms.
Right, the Middle East.
Yeah, the conflict there hasn't just continued, it has violently expanded across 4 different countries, essentially overnight.
And that geographic spread is really what elevates this from, a regional dispute to a massive systemic shock.
Yeah.
According to the brief, U.S. and Saudi aircraft conducted coordinated strikes on Iran-backed militia bases in Iraq, and the immediate physical toll is at least 20 killed. And crucially, 4 Iranian Revolutionary Guard advisors were reportedly among those casualties.
Wow.
But the boundaries being crossed here, geographic and political, are just unprecedented.
That is the piece that honestly made me stop reading and pull out a highlighter. Because this is Saudi Arabia's first publicly acknowledged participation in strikes alongside the U.S.
Right. The public aspect is key.
I want to pause on that because it feels like a massive geopolitical shift, doesn't it? For years, Saudi Arabia has preferred to fight its battles via proxy, or at least, maintain some level of plausible deniability to avoid a direct state-on-state war with Iran.
Oh, absolutely.
So why would Riyadh choose right now, in this incredibly tense moment, to make their military coordination with Washington so undeniably public?
If we connect this to the bigger picture, Saudi Arabia's public acknowledgement is a profound signal of deterrence.
Okay. How so?
Well, historically, operating in the shadows gave both sides a way to de-escalate without losing face. But by flying Saudi jets alongside American ones and announcing it to the whole world, Riyadh is intentionally tying its own security architecture directly to the United States.
Wow. So they're basically daring them to respond.
Exactly. They are telling Tehran that hitting Saudi infrastructure in retaliation isn't just some regional squabble anymore. It's an attack on a joint U.S.-Saudi operation. It means the perceived threat to their energy infrastructure has become so existential that back-channel diplomacy just isn't viewed as sufficient protection anymore.
And unfortunately, that deterrence didn't seem to hold, right? Because the retaliation was almost immediate.
Yeah, it was fast.
The brief confirms Iran fired ballistic missiles at American military installations in Jordan. And Jordan actually managed to intercept 5 of those missiles in their airspace, which, that is its own diplomatic nightmare.
Total nightmare.
On top of that, Iran attacked 3 commercial vessels in the Strait of Hormuz. It feels to me like trying to plug leaks in a dam, It's like this geopolitical game of whack-a-mole.
Yeah.
You hit one target in Iraq, and the water pressure immediately blows out 3 new shipping routes in entirely different bodies of water.
That's a great way to put it. And the Strait of Hormuz is the central artery of global energy. Roughly a fifth of the world's daily oil consumption passes through that one narrow waterway.
A fifth?
Uh,
That's wild.
Yeah, and the diplomatic off-ramps are rapidly disappearing. The brief notes that an Omani diplomatic proposal to establish joint regional management of the strait has just completely collapsed.
Which is incredibly telling to me, considering Oman usually acts as like the Switzerland of the Middle East, quietly brokering these back-channel deals.
Right, they're the ultimate mediators.
Yeah, if Oman can't get people to the table is just gone.
The polarization is simply too severe for joint management right now. And the spillover isn't stopping at the Persian Gulf either. The conflict is physically migrating.
Yeah, you mean the stuff in Egypt.
Exactly. We have reports of a drone striking a U.S.-owned gas storage tanker, the Energos Winter, all the way over at Egypt's Mediterranean port of Damietta.
So it's spreading all the way to the Mediterranean. Meanwhile, the brief notes China is reportedly making these completely separate side door arrangements to protect its own tankers from Houthi forces.
Right, they're just bypassing the international coalition entirely.
It is literally every nation for itself in the shipping lanes. The whole era of a unified global maritime security umbrella just seems to be fracturing in real time.
And the immediate mechanical consequence of all this physical disruption, it's a massive supply shock.
Oh, the oil prices.
Right. The price of Brent crude oil just surged 7% to over $90 a barrel. And simultaneously, American crude inventories just fell by 7.2 million barrels.
Wow.
Yeah, dropping U.S. reserves to their lowest level since 2018. We are watching the physical buffer of the global economy just vanish.
Which brings us directly to the American economy, because the 7% spike in oil isn't just, a number on a commodities ticker. It is an immediate, unavoidable tax on everything that moves.
Everything.
And that energy volatility is the exact headache currently splitting the Federal Reserve right down the middle.
Oh, the Fed meeting was fascinating. They just concluded their policy meeting and decided to hold their benchmark interest rate steady at a range of 3.50 to 3.75%.
Okay, which sounds normal.
Right. On paper, a hold sounds like stability. But the internal mechanics of that decision are absolutely flashing red.
Because the vote wasn't unanimous. 3 of the 12 voting members of the Federal Open Market Committee actively dissented.
Which is huge.
They didn't want to hold, they actually wanted to raise rates. I really want to dig into the mechanics of that because the Fed usually operates like a phalanx.
Yeah, they really prize consensus.
Exactly. They want to project absolute certainty to the markets. So for a full quarter of the voting members to publicly break ranks and demand a rate hike, that seems like a screaming alarm bell.
It is a mutiny by central banking standards.
Believe me, yeah.
It signals this deep, fundamental anxiety about inflation making a resurgence. Specifically, inflation driven by these exact energy spikes we just talked about, plus new global tariffs.
Right.
Those 3 dissenting members are looking at the math and concluding that if you don't raise your rates now to cool down consumer demand, the higher cost of shipping and oil is going to bleed into the price of groceries, electronics, housing, everything.
Just kicking off an inflationary spiral.
Exactly. One that we might not be able to stop.
But wait, if the inflation threat from $90 oil and these new tariffs is so obvious that 3 prominent economists wanted to hike rates immediately, isn't Fed Chair Kevin Warsh essentially just kicking the can down the road by holding rates steady?
It certainly looks that way to a lot of analysts.
Because he flat out refused to commit to any specific decision for the next meeting. It feels like he's driving a car with a slipping transmission. If he hits the gas and cuts rates to help the economy grow, he blows the engine with inflation. But if he slams the brakes and hikes rates, the car stalls into a recession.
That is the exact trap he is in. And the ratings agency Fitch just released a really stark warning illustrating the danger of that brake pedal.
I had to say.
Fitch is flagging that elevated borrowing costs are threatening to delay or outright cancel major capital projects globally. The 30-year Treasury yield is still stubbornly sitting above 5%.
Okay, let's break down why that 5% number matters so much to the average listener. Why is that the magic number?
Think of the 30-year Treasury yield as the baseline gravity for all other money in the economy.
Okay.
It dictates the cost of mortgages, auto loans, and corporate bonds. If a massive company wants to build a billion-dollar manufacturing plant, they don't use cash out of their checking account, they borrow it.
Right.
When borrowing costs sit above 5%, the math on that factory fundamentally changes. A project that would have generated a comfortable profit at, say, a 3% interest rate suddenly becomes a massive liability at 5%.
So the math just doesn't work anymore.
Exactly. So companies just cancel the projects. The construction workers don't get hired, the supply chain orders get slashed, and economic growth stalls.
And the market clearly hates that uncertainty. The Dow dropped 1.3%, the S&P slipped 0.2%. But I really want to follow that exact thread about capital projects and the cost of borrowing.
Yeah, it's all connected.
Because when it costs over 5% to borrow money, investors suddenly lose their patience for, potential.
Yes, the era of cheap money is over.
Right. When money is cheap, people will fund a cool idea or some vague tech narrative. But when money's expensive, they demand actual, verifiable cash flow. And that brings us to the sudden, brutal reality check that's hitting the artificial intelligence market.
The grace period for AI is officially over. We are firmly transitioning from the build it and they will come phase to the prove it makes money phase.
It's about time, honestly.
The entire tech industry is facing a massive structural test right now. Investors are looking at the hundreds of billions of dollars being poured into AI data centers, specialized chips, new power grids, and they are demanding to know if all this end-user demand can actually produce sufficient profit across the entire supply chain.
And according to the stock market this week, the answer is a resounding no.
Yeah, it was ugly.
Let's look at South Korea's SK Hynix, which is one of the biggest chip makers on the planet. Here's where it gets really interesting to me. SK Hynix just reported an operating profit increase of 557% from a year earlier.
A massive jump.
557%. It sounds like they got an A+ on their report card, right? But their shares plunged 10%. I have to ask, how does a multi-billion-dollar company multiply its actual realized profits by 5 and still lose a tenth of its entire market value in a single day?
Because the valuations for AI memory chips were priced for an impossible parabolic trajectory.
Oh, so they expected even more.
Right. Investors aren't looking backward at the 557% growth that already happened. They're looking at the forward earnings multiples. They're questioning if that growth rate can possibly accelerate fast enough to justify the current sky-high stock price.
So the market basically realized it graded SK Hynix on a curve that requires perpetual miracles.
Exactly. And it's not just the chip makers feeling this gravity. Vertiv, which supplies the physical cooling and power equipment for these massive AI data centers, saw its shares drop 15% after missing revenue expectations.
Wow, 15%. That feels like a canary in the coal mine, honestly.
It really does.
Vertiv makes the unglamorous nuts and bolts infrastructure. The fact that they are missing revenue targets proves that the AI halo effect is wearing off. Just having the word AI in your business plan no longer protects you from a market correction.
No, it doesn't.
So what does this reality check mean for the giants at the top of the food chain? Because there's a deeply concerning detail in this brief about NVIDIA and OpenAI.
This is perhaps the most precarious financial dynamic in the tech sector right now.
Okay.
NVIDIA, the undisputed king of AI hardware, is reportedly facing intense regulatory and investor scrutiny over a $250 billion financing guarantee for OpenAI.
$250 billion.
Yes. And the reporting suggests OpenAI plans to use this financial backing to make as much as $350 billion in future NVIDIA chip purchases.
Wait, let me make sure I'm doing this math right. A $250 billion guarantee. So NVIDIA is essentially co-signing a massive loan for OpenAI explicitly so that OpenAI can turn around and buy NVIDIA's own products to inflate NVIDIA's revenue.
Yes. It is a textbook example of circular financing or vendor financing.
That sounds incredibly shady.
It's incredibly dangerous because it artificially inflates demand and concentrates financial risk into a closed echo chamber. We actually saw similar mechanisms blow up during the telecom crash in the early 2000s.
It's literally building a skyscraper out of financial dominoes.
Pretty much.
If the end-user demand for OpenAI software falters, say, everyday businesses decide ChatGPT just isn't worth enterprise subscription fees, OpenAI can't pay its debts.
Right.
If OpenAI defaults, NVIDIA is suddenly on the hook for that $250 billion guarantee. That entirely undermines NVIDIA's massive valuation, which then drags down the entire S&P 500, which has been heavily reliant on NVIDIA's continuous growth. It is a total house of cards.
And that house is facing new external winds, too.
Oh, the competition in China.
Yeah, the brief highlights that China's CXMT is rapidly emerging as a fierce, viable competitor in AI memory chips. The American tech giants just no longer have an absolute monopoly on the hardware innovation. And this intense pressure all flows uphill to Microsoft and Meta. They are both about to report earnings, And the market is demanding proof that products like Microsoft Copilot and Azure Cloud Services are actually generating enough new organic revenue to pay off the absolute fortunes they've dumped into these data centers.
They have to prove the software is actually useful enough to justify the hardware.
Precisely.
But, while Silicon Valley stresses over the financial architecture of data centers, we really need to look at the physical architecture, because these AI models require staggering amounts of electricity and water to function.
Yeah, the physical footprint is enormous.
And according to the brief, the physical systems that keep our society running are quite literally buckling under the strain. Let's look at Europe. The EU is warning that massive, uncontainable wildfires are shifting east from France and Spain toward Italy, Greece, and Central Europe.
And these aren't just your typical seasonal fires. The 2025 season burned over 1 million hectares, and 2026 is currently tracking to be just as devastating.
It's terrifying.
The heat is so intense, and the vegetation is so devoid of moisture that they are dealing with a meteorological phenomenon called pyrocumulonimbus clouds.
I was reading that section of the brief in just pure awe. For anyone unfamiliar, a pyrocumulonimbus cloud is what happens when a wildfire burns so hot and so intensely that it essentially creates a vacuum.
It's unbelievable.
Yeah, it pulls in massive amounts of oxygen and pushes a convection column incredibly high into the atmosphere. The smoke and moisture condense rapidly up there, and it gives birth to its own localized, terrifying thunderstorm.
Right, but not a normal storm.
No. Instead of rain, it generates fierce, erratic winds that fan the flames, and it shoots dry lightning back down to the ground, sparking dozens of new fires miles away. It is nature literally engineering a fire-breathing storm.
It's apocalyptic.
How are we supposed to manage our baseline economy, our tourism, our agriculture, our power grids when the environment itself is behaving this extremely?
This raises an important question about the hidden fragility of our corporate systems.
Yeah.
We tend to think of climate strictly as an environmental issue, but Fitch Ratings just flagged the strengthening El Niño weather pattern as an emerging global credit risk.
Credit risk, how does that connect?
They are linking physical climate volatility directly to corporate debt defaults. Because when a pyrocumulonimbus cloud shuts down an entire agricultural region or halts logistics on a major river due to drought, businesses miss their revenue target.
Oh, yeah, I see.
And when they miss their targets, they default on those high-interest loans we talked about earlier.
Yeah.
Our modern, hyper-optimized supply chains are utterly unequipped to absorb this much simultaneous physical disruption.
And we are seeing that exact supply chain breakdown right now in the United States, specifically in the food sector. The brief outlines a massive cyclosporiasis outbreak in Michigan.
Yeah, the numbers on this are staggering.
We're looking at over 8,100 reported cases, with at least 98 people hospitalized.
And foodborne illness happens, but what makes this specific outbreak so uniquely frustrating for federal health investigators is the biology of the parasite itself. Cyclosporia usually spreads through contaminated fresh produce or water. But unlike normal food poisoning that hits you in 24 hours, Cyclosporia has a delayed symptom onset.
So people don't know they're sick right away.
Right. By the time someone gets severely sick with the cramping and dehydration, an incubation period of 1 to 2 weeks has already passed.
So an investigator goes to a hospitalized patient and asks, hey, what exact brand of berries did you eat 2 weeks ago on a Tuesday?
Exactly. And nobody can remember that.
I certainly couldn't. Moreover, the packaging is long gone. The trash has been taken out.
The modern just-in-time agricultural supply chain moves so fast across borders that by the time the sickness registers in a hospital database, the contaminated batch of produce has already been consumed.
Wow.
The evidence is in a landfill somewhere, and tracing the root supplier becomes a forensic impossibility. It just highlights how opaque our distribution networks really are when speed is prioritized over traceability.
And speaking of health systems failing to trace and contain, the data in this brief gets even grimmer. The U.S. has hit 2,318 cases of measles.
It's awful.
That is a 35-year high.
It is a staggering regression in public health. Nearly 70% of those infections are in populations under 20 years old.
So mostly kids.
Mostly kids. And the underlying mechanism here is the mathematics of herd immunity. The national MMR vaccination coverage has dropped to 92.5%.
And that's not high enough.
No. For a highly contagious virus like measles, which has an incredibly high reproduction number, meaning one infected person can easily infect 12 to 18 others in a susceptible population. You generally need at least 95% vaccination coverage to create a firewall that protects the immunocompromised.
And the brief notes that 16 states have now fallen below a 90% threshold.
Yeah, 16 states.
So we haven't just weakened the firewall.
Yeah.
In wide swaths of the country, we have completely dismantled it, leaving local communities totally exposed.
It is a textbook example of a protective system that society just took for granted, slowly eroding through complacency and misinformation until it simply breaks. And we see this same friction between public protection and modern complexity happening in the cultural sphere as well. Look at the new legislation in France.
Oh, the social media ban.
Right.
France just instituted a sweeping prohibition on social media access for children under 15 years old. The goal is clearly to protect youth mental health, which, is a noble pursuit, but the execution creates a massive, almost unsolvable catch-22.
Exactly. Because to enforce a digital age limit, a government or a tech platform has to technically verify the user's age.
And exactly how do you do that? To prove someone is over 15 on the internet, the platform have to demand a government-issued ID, a passport, or even perform biometric facial scanning.
Which is incredibly invasive.
Right. So to protect a child's mental health and safety online, you are legally requiring them to hand over highly sensitive, deeply personal data to private tech corporations.
It's a paradox.
You literally cannot verify age without collecting data, and the core tenet of digital privacy is that you shouldn't be collecting massive databases on minors. It places parental authority and child safety in direct mechanical opposition to data privacy.
It perfectly encapsulates the overarching theme of today's entire news brief, honestly.
It really does.
Across every single sector we've discussed. From the tech platforms trying to verify age in France, to the Federal Reserve trying to calibrate interest rates in Washington, to the cargo ships trying to navigate the Middle East, we are seeing rigid legacy systems buckling under the weight of modern interconnected pressures.
It really is one giant interconnected web. We started by looking at a chaotic seismograph, but I think we've managed to trace how one snapping fault line triggers the next.
Yeah, I think so.
The geopolitical conflict spikes the oil prices. The $90 oil forces the Fed to keep borrowing costs above 5%. Those 5% borrowing costs force investors to demand immediate cash flow from AI companies. And those AI companies are trying to build massive infrastructure in a physical world that is currently battling pyrocumulonimbus wildfires and breaking supply chains.
It's a chain reaction.
The world is collectively demanding proof of stability, but currently it is only receiving volatility.
And that synthesis is exactly why it is so crucial to look at the mechanics beneath the headlines. If you only read the tech blog about SK Hynix dropping 10%, you completely miss the macroeconomic story about treasury yields.
Absolutely.
If you only look at the oil prices, you miss the profound geopolitical shift in Saudi Arabia's military posture. Understanding the why is the only way to navigate the what.
So as we wrap up this deep dive, I want to leave you with a final thought to mull over. We spent a large portion of this conversation unpacking the panic in the tech sector.
We did.
The brightest minds and deepest pockets in the world are frantically trying to prove that hundreds of billions of dollars spent on generative artificial intelligence will eventually field like slightly better ad targeting and more efficient enterprise cloud software.
Which seems pretty trivial in the grand scheme of things.
Right. But as we look at the physical reality documented in this brief, the fire-breathing storms burning across Europe, the opaque food supply chains breaking down in Michigan, the vital shipping routes paralyzed by cheap drones in the Middle East, you really have to wonder.
Yeah.
When will this revolutionary trillion-dollar AI actually be deployed to solve the physical logistics, climate, and health crises that are currently threatening our basic human infrastructure?
That is the multi-trillion-dollar question. Until the digital revolution can figure out how to put out the literal fires, those needles on our global seismograph are going to keep jumping.
They absolutely are. Well, that is all the time we have for today's deep dive. We hope this exploration helped clear up the ink blot just a little bit for you. Take care of yourselves out there. Keep asking the big questions about how these systems actually work, and we will catch you next time.
Stay curious and stay safe.